Yeah, so I think this is a time of year, especially as we head into the holiday season, where people start to really think about things that are important to them from a philanthropic standpoint.
Most commonly, people will write a check for $100 and they'll give it to charity, and generally speaking, depending on their adjusted gross income, that could be fully deductible for them or partially deductible depending on a couple of technical factors.
Going back to required minimum distributions, you can also donate money via that.
If people have a sizable RMD and may not need that money to live their life and are charitably inclined, you can give part of your RMD directly to a charity.
That enables you to check the box that you've taken your required distribution out, yet you don't have to pay the taxes on it, and the charity benefits from your donation.
Others, you can take appreciated stock. So if you have a brokerage account, again, going back to having liquid assets, you have money and you put in X amount of dollars into Apple stock and it's now worth Y amount, it's worth more, right? So you could donate that stock.
So if you bought a stock for $10 a share and now it's worth $100, that $90 is profit. So great, you made money, the stock made money. If you were to sell that as an individual, you're gonna pay some tax on that $90 gain. If you're charitably inclined and you want to think about another thing, you can actually give shares away directly to the charity.
So most charities, universities, foundations, whatever the case is, they usually have a relationship with an advisor or a brokerage firm, and you're able to basically transfer those shares over to them.
So it's a win-win for the donor and it's a win-win for the charity.